Capital India Private Limited. We welcome you to the H1FY23 call of the India Cements Limited. On the call, we have with us the entire senior management team of the India Cements. I would like to mention on behalf of the India Cements Limited and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements related to future developments and current performance. These statements are subject to a number of risks, uncertainties, and other important factors that may cause the actual developments and results to differ materially from the statements made. The India Cements Limited and the management of the company assumes no obligation to publicly update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. I will now hand over the floor to Mr. N. Srinivasan, Vice Chairman and Managing Director of the company, for his opening remarks, which will follow by interactive Q&A. Thank you, and over to you, Srinivasan, sir.
Thanks, Vaibhav. Good afternoon, ladies and gentlemen. The second quarter, India Cement in fact posted a loss which is the highest in its history so far. What caused it? An unprecedented rise in the cost of coal, which naturally increased the cost of production, which could not be compensated by an immediate price increase, as a result of which the cost increased because of direct fuel cost. It increased because of the cost of power. The coal for power also went up, and packing materials. As a result of which, it was impossible at that time to immediately pass on the increase in cost to the consumer. So we had to bear it. There is no other reason except that the material cost of coal shot through the roof. Efficiency in the factories were okay. We really did not have any other reason for the increase in cost and consequent variable costs going up. I mean, what was 2,300, 2,100 went up to 3,600, 3,700, and it was not possible to. What happens now? We have now, the cement industry as a whole, I think, has seen the cost increase, and as a whole, I think there is a general feeling that all prices must go up. We are seeing signs of it. The last month we had, there was an increase, and this month there will be a further increase. So I expect that by the end of this month, the prices of cement prices would have gone up to such an extent that they will, for all companies, it will be close to break even. And next month, the increase contemplated will push cement industry into the black. This is the plan. Hopefully it fructifies, and if you ask me, I have no doubt that it will fructify. I'm happy to carry any questions that the members have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, to ask a question, you may enter star and 1 on your phone. The first question is from the line of Manish Oswal from Nirmal Bang Securities. Please go ahead.
Yes, sir. Thank you for the opportunity. My first question on our average coal cost per ton in this quarter compared to quarter 1 FY23.
Coal cost per ton current quarter compared to
600. Average cost 50,000.
Just a minute, I'll get the.
20,552.
Give the figure.
20,552.
20,752. Versus last quarter, sir?
17,285.
285. Secondly, sir, you comment about the industry turning into black in the next quarter. So how is the pricing after the festive season in the market? And
I'm not talking of the industry as a whole. It is possible that the industry will turn into the black provided people increase the prices. After the festive season, the demand is brisk.
hello.
The demand is showing signs of picking up after Diwali.
Okay. Right, sir. Thank you.
Thank you. Participants, to ask a question, please enter star and 1. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, good afternoon. Thanks for the opportunity. So on the continuing on the power and fuel costs, so what kind of decline are we expecting in the third quarter on that number?
You see, I'm not expecting a decline in the cost of coal. Coal, you see, for example, if you were to import American coal, the lead time is 2.5 months. So I should have booked coal now. The coal I have booked is at current prices, which will land 2.5. So for 2.5 months, there will be no effective decrease in the cost of coal. What I meant was that the price of cement will go up. The margins will reappear, not because the coal cost is going down. It is because the cement price is going up, which is what we expect.
Okay, understood. Also on volumes, like can you please share the number or breakup in terms of what are the cement sales and clinker sales?
Shall I say? 22.23 lakh tons was the cement sales, and clinker sale was only 4,000. Sorry, 22.50 lakh tons was the sale of cement, and 0.04 lakh tons was the sale of clinker.
22.5 and 0.4.
Right, 22.54 in total, clinker and cement put together.
So 22.54, which includes 0.4 of clinker.
Right, 0.04.
Sorry?
4,000 tons of clinker sale. 0.04.
Oh, 0.0. Okay, got it. And also, like, generally after the entry of Adani, generally there's an expectation of consolidation in the sector and all that. So, what are your views on that? Do you also think that there could be a lot of consolidation here?
I am busy trying to increase the price of cement. See, the consolidation, if it happens, it happens. But I have no view.
Okay. So far, I mean, as such, there's business as usual as of now, even though...
Yes, business as usual, yes.
Okay. And the last question is, also there was some change in the discounting structure and pricing structure that was being attempted after that, I believe, the change of ownership. So how do you think this will impact the price realizations generally for the industry?
See, the people they wanted the invoice price to be respected, and you sell at the invoice price. Don't allow the sales at a lower price and then compensate the dealer later. This is what was suggested by the Adani. Some companies have accepted and adopted it, although everyone accepted it, it is followed by some, by some not.
Okay. So it's not industry-wide that this has happened then?
See, the attempt is industry-wide.
Okay. Fine. But does it not reduce the price flexibility and the ability to kind of react to demand patterns and all that, like in case this happens?
No, which you say is the... Are you saying the new system is better than the old system?
No, I'm saying in the new system, doesn't it reduce the flexibility to react to changes in demand and all that if you follow the invoice pricing?
See, ultimately, in any product, invoice has to be respected, isn't it? See, if you go to buy a motor car, can you buy it in less than the invoice price? So it's a good system, but it needs a lot of concentration and a lot of effort to make it happen. Some companies are doing it very well, some are halfway, but I think ultimately it is a good system for the industry.
Sure, got it. Thank you.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Krishna Kumar from Lion Hills Capital. Please go ahead.
Yeah, good afternoon, sir. Congrats on a set of numbers which are reasonably good given the environment that we have been operating in. Just a question on the pricing that's happening in the industry. We have also other players in South which have commissioned capacities, and also on the grinding side also added capacity. So, given the current environment of supply, etc., is it reasonable to expect pricing to be stronger, sir, in the next 6 months to 1 year at least, given that so much supply also coming to the market, sir?
You see, cement is a product where you can choose volume, you can choose price. If you choose volume over price, you will have a problem, because our experience shows that even though more capacity is coming, I don't know where the integrated capacity in South is coming. In South, I'm talking Tamil Nadu. The other grinding units, they need clinker from some source. So, but to answer your question, I still expect pricing to be strong.
Okay. So the other question is on this on the transaction we did in early October. So we have about another 100 crores to be received basically. So is that a correct understanding, sir, on the transaction? And
you mean transaction of India Cements?
Yes, you are.
I know that. See, we have received 500. We are yet to receive 100.
Okay, sir. And this completely goes towards balance sheet reduction in terms of debt, sir. The consideration.
See, what we have done is about 200 crores has gone for correcting the current ratio. Balance money is sitting as a reserve. We will repay all our obligations, debt obligations, without touching this cash hold.
Okay, sir. Thank you, sir. Thank you very much, sir.
Thank you. A reminder to participants, please enter star and 1 to ask a question. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. So a couple of questions. First is on power and fuel costs. Can you indicate on a rupees per kcal basis how much was it for the quarter and in the prior quarter?
So what I
3
did,
rupees, coal was 3 rupees 26 paisa per quarter, per kcal.
So that was in Q2, and in Q1?
2.69.
2.69. And sir, can you give a directional, basically some commentary on how it could actually fare into Q3 or Q4 based on the inventory that we have or the bookings that we have done?
No, Q3, I don't know.
the expectation is that coal will be closer to 3 and maybe just a shade under the 3 rupees per kilocal.
Okay, so this looks higher than what we had in this quarter. So is it on back of, are we carrying some high cost inventory, or is it on the back of the trend line that we are looking at when it comes to the fuel prices?
It will be lower than quarter 2. Quarter 2 is 3.26. Quarter 1 is 2.9. So we are expecting the third quarter to be hovering around 3 rupees.
3 rupees. Perfect. That helps. So my second question was on pricing. Srinivasan sir, you indicated that few mills are actually going ahead on reducing the price between the invoice price and the mill price. So I just wanted to understand broader at an industry level, why would few mills actually not do this? Because it is in the benefit for everyone, right? If you could broadly explain at an industry level, that would be very useful.
I cannot answer for the others what they do, because all I can say is a suggestion made that why not have greater importance to the invoice price. I agree. I hold the same view. So slowly people will change to it.
Sure. Sir, I had a related, not exactly a related question, but more on taxation. So recently government came up with a notification wherein if it comes to gold coins or overseas trips, that we do it for the dealers, there will be an additional tax also on that. Sir, what will be our stance over here? How should we look at it? So if we are giving gold coins to dealers, how should we look at it? Like, does the math change? How should we understand this, sir?
Most of our discounts are only through credit notes. Only a very fraction of the discount is given as gold coin. Wherever gold coins are issued, effective the new section, that is 194R, came into effect, we are deducting tax and remitting to the government.
Okay, that's quite helpful. And sir, lastly, question on Springway. Sir, when we got pretty decent valuations over there. I just had a clarification. Did we have any incentives on that particular asset from the state government?
No, we did not start producing. No.
Correct. But
It comes with a separate company, so it has nothing to do with tomatoes. India is the investor there.
Okay. That helps, sir. Thank you so much for the answers. Wish you good luck. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please enter star and 1 on your phone. The next question is from the line of Shobhik Chakraborty from Dolat Capital. Please go ahead.
Yes, thank you, sir, for giving me the opportunity. Sir, I would like to know can you just share the fuel mix for this quarter?
Sorry?
The fuel mix.
Your voice is not very audible. If you're wearing any earphones, please remove it.
Sure. Is this better?
84%. Pet coke, 7%.
Okay. So can you just repeat that? I was not able to hear it. You said 7% pet coke, right?
4%. Pet coke is 11%.
Okay. Got it, sir. Sir, and also, can you please let me know the consumption cost per kcal in Q2 FY22?
Sorry?
Consumption cost per kcal for Q2 FY22.
1.7. Q2.
Yes, sir.
No, last year. 1.67.
1.67. Okay. Got it, sir. Sir, and also last question on the pricing front. So you said that you saw a price hike both in October and in November. Can you quantify that number? I mean, by how much did you see that increase in October and also in November? Like starting in November, whatever you saw.
The full invoice price we did not get, but we got an increase.
See, the way it is, it is that in different states we got different prices. For example, Maharashtra, Gujarat, MP, Rajasthan, East we got nothing, zero. There was no increase at all whatsoever. Whereas in Tamil Nadu, Kerala, Karnataka, Andhra, Telangana, we got between 30 to 40 rupees a bag. So you have to look at the average of our total sale, and that is the price increase. Other 20 rupees, from the 15 to 20 rupees is being attended from the 3rd of November.
Okay. Thank you, sir. Sir, and also this last question on the volume front. Can you please share the volume for Q2 FY22? I mean last year, quarter two.
22.53 lakh tons of cement and 1.07 lakh tons of clinker.
Okay. That's all, sir. Thank you so much. Yeah. Wish you all the best.
Thank you. A reminder to the participants, please enter star and 1 to ask a question. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, good afternoon, sir. My first question is on the segmental data, which you generally give shipping, windmill, and RMC revenue and EBITDA.
Shipping, it is 14.43 crores of turnover. Yes, sir. Shipping revenue for the quarter is 14.43 and EBITDA is 8.92 crores. Windmill is 8.02 crores of total revenue, EBITDA of 6. RMC is 29.16 revenue and EBITDA of 2.28 crores.
Sir, how much was the windmill EBITDA you mentioned? Hello. Yeah, sir, how much was the windmill EBITDA you mentioned? You mentioned windmill revenue is 8.02 crores. EBITDA was how much?
0.61.
6.61. Okay.
Revenue of 8.02, not 22. 8.02 and EBITDA of 6.61.
Okay. And what about the net debt position as of first half FY23? Net debt position as of first half 23?
What's the debt? Debt. On the total debt?
The debt position.
Total debt as of September 30.
No, debt he wants.
Debt not much of difference. Not much of difference. The total debt is 2937 crores. 2,937 crores as of September 30.
And they should go down by 500 crores post the receipt of money from the sale of MP business?
Not 500 crores, 300 crores.
300 crores, okay. And just one question on last quarter call, we mentioned about there were some queries from CCI from various companies in South and in other regions. Has that thing been settled now, or it has been pushed to later period?
There's no action on that.
We have not heard anything about it.
We have filed our replies and waiting for a response from CCI.
Sure, sir. These are my questions. Thank you.
Thank you. Participants, if you wish to ask any questions, please enter star and 1 on your phone. Ladies and gentlemen, to ask a question, please enter star and 1 on your phone now. A final reminder to all the participants, please enter star and 1 to ask a question. The next question is from the line of Ravi, individual investor. Please go ahead.
My question is, can you please provide the RMC and shipping windmill segment-wise data quarter-on-quarter as well?
Yeah. RMC, Q1 total revenue is 26.04 crores and EBITDA 1.46 crores. Windmill, total revenue of 5.66 crores and EBITDA 4.44 crores. Shipping, 3.32 crores of the total revenue and negative of 1.39 crores.
And RMC for current quarter was?
RMC for current quarter was 29.16 crores of total revenue and 2.28 crores of EBITDA.
Okay, sir. Thank you so much. All the best for your future.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. As there are no further questions, I now hand the conference over to Mr. Vaibhav Agarwal for closing comments.
Yeah, thank you. On behalf of Phillip Capital India Private Limited, I would like to thank the manager of India Cements for the call, and many thanks to the party for joining the call. Thank you very much, sir. You may now conclude the call. Thank you.
Thank you.
Thank you. On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.